Well, feeling the heat now from the global underperformance, and I don't think we're getting spared either. We're down about 372 points for the Nifty futures. We're sub that 23,000 print conclusively. For the spot, of course, it's much worse there in terms of levels. We're sub that 22,900 print for the Nifty right now, a dip of 350 points there. It's really all a sea of red, and more so for the broader end of the market, because if you just look at the F&O picture alone, it's a count of 206 that's standing to the reds right now, with barely 16 names standing to the greens. Tata Steel is down 8.5%. Hindalco getting whacked, almost an 8% cut there as well. ONGC down 7.5%. Tata Motors down 5.5%. L&T is down 5% right now. And then, of course, names like Adani Ports, Adani Enterprises. Look at Reliance. Reliance is down 4%. I don't recall Reliance cracking the way it is today in the last many trading sessions. 1200 is just about what Reliance is defending. And I think intraday we even breached that mark. That said, IndusInd Bank, technology names, BEL, NTPC, Titan, M&M, can't really pinpoint any island of safety other than, of course, HDFC Bank after its quarterly numbers. And that's pretty much the case with the Bajaj Finance as well. So those two, one would say, are the only resilient names in today's trading session. Sure enough, ICICI Bank also hasn't fallen, but it's not a meaningful move. And to be fair, in the recent bout of correction, ICICI Bank has also fallen a bit. Bharti, yes, it's standing ground, but it's not really seeing any gains there. At best, it's flat right now, sticking by with that 1750 mark. Let's welcome on board then our chartists as well as fundamental experts and try and figure out what is it that they're making of the carnage today. Kunal, guess one day respite is all that we had at our hands yesterday, and today we're aligning with the rest of the globe. How bad could it get from here?
It's already very bad. Let's hope it doesn't get very bad. But, I think today we've managed to break past below series of supports, crucial resistances on the indicators. We've broken below the 23,000 mark on the index, which I believe was a very crucial support for the Nifty. We've broken below the second gap, which was formed on the index in this 1800 point rally. The VIX has started to rise again. That's almost at 13.714 mark, which means that we could now be looking at more volatile days going forward. The only positive aspect when we look at the market so far is that many large cap names, HDFC Bank, Bajaj Finance, etc. Many of these larger cap names, they are holding fort for themselves. But that could probably just about stabilize or neutralize the index. We are now prone back again to what happens on the global front. If we see more of an aggravated sell-off coming back into the US indices, then I believe that could have a more of a ripple effect into our markets.
Right, so that's the take coming in on the market, the setup going ahead. Remember the pharma index, that one is under immense pressure in trade today from the word go. In fact, you had pharma index on an intraday basis hit see a biggest intraday drop since COVID era. And the reason being for that is what exactly Donald Trump had to say in overnight, for us overnight, but yesterday post when he was actually talking to the press, he did speak of the fact that you will have the pharma tariffs soon. In fact, let's hear him out.
It's starting very soon. The chips are starting very soon. The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals, as a separate category. And we'll be announcing that sometime in the near future, not too distant future. That's under review right now.
That's what Donald Trump had to say. And on the back of that, you're seeing carnage across the board when you talk about the pharma names. And let's actually hear out what Varun has to say with regards to the breakup, why these companies are hit, and what does this actually tariff would actually mean for the entire sector. Varun?
Well, so this is an interesting note by CLSA after the news of Donald Trump saying that they would impose tariff on pharma. CLSA says that they believe the risk of very high tariff to Indian pharma companies is very low, and this is low because the custom duty on US pharma imports in India is from 5 to 10%. So the reciprocal tariff that can be around 10% for Indian pharma companies. Now India imports around $800 million worth of drugs from the US, but it exports $8.7 billion. This is what CLSA says. And India receives less than 50 million from the custom duty of US imports, which will be significantly lower than the reciprocal tariff which US will import. So what India will do, thus Indian government is likely to actually remove the custom duty on US pharma exports, imports, to which the US may actually reciprocate. And even if the tariff is imposed, then CLSA believes that Indian pharma companies will actually pass on this because of the dominant share that the Indian pharma companies, especially in the generic business, that they have in the US. Also, for generic products, they have a very low margin. Thus, if they are unable to, pass on the prices, they may actually stop manufacturing this, because no one is going to do the manufacturing at loss, and this would actually lead to a drug shortage in US. So CLSA believes that there is not going to be a high tariff on Indian pharma companies. They might pass on, and if there might be a case that Indian government will actually remove the custom duty on US, so the overall setup can be done between the trade deficit which is lingering between India and the US.
Let me take that conversation forward. We've got Narendra Solanki joining in on the show right now from Anand Rathi Shares and Stock Brokers. Narendra, hi, afternoon. Welcome to ET Now. Just wanted to get your sense, because you know that one island of safety that one thought is going to be spared from tariffs, pharma, that also seems to be a hazy picture right now. Don't know whether tariffs eventually are going to come into pharma or not. But what is your own sense on whether these dips should be used as an opportunity to buy, or would you say avoid right now till you have clarity on tariff implementation?
Yeah, good afternoon. Definitely after yesterday's tariff announcement, markets have thought that, okay, this is over, and now whatever has been announced, we have to adjust according to that, and let's move forward. But again, the statement on pharma sector, especially on tariffs, coming today. So again, the markets have gone into a territory where it is still yet uncertain whether which sectors would be coming in next, and whether these tariffs are final. So this back and forth, I think, would continue for at least next fortnight or a month, until individual countries completes their trade agreements and then settle down on the rates and what would be the solution of all these tariff announcements. So I think this volatility can persist for a fortnight or a month, and then only a clear picture would emerge for the companies to take on the evasive steps or to maneuver their business strategies and adjust to their supply chain. So definitely, this volatility might persist for a fortnight, and then only the clarity emerges. However, if one can focus on domestic-based industries, then they can definitely invest in these kind of low sentimental environment, wherein you can find a good bargains in businesses which are focused mainly on domestic fronts. So definitely in that aspect, you can get a good bargain on that front.
Hi Narendra, this is Cheryl also joining the conversation. I wanted to get your view on the metal sector. Today, that sector also is hit pretty hard. And over the last 1 month, everyone was betting on metal space, hoping that this one actually would benefit with what is exactly happening when you talk about the dollar index, the way Chinese economy is moving. And now you have the reciprocal tariffs. How should one actually gauge this sector, at least for the medium to long-term horizon?
See, the metals is a global cyclical commodity, so definitely the supply and demand scenario impacts. And the main concern regarding the metal space is that post tariffs, there might be some dumping which might happen from other countries into India or some other countries where the tariffs are not there. So this is again a key risk to global large companies. However, what we are looking into this metal space is that we are focusing on companies which have a strong backward integration, and then having a very low cost of raw materials which can withstand this down cycle, and then probably come out winners. So focusing on those companies rather than global companies would be a better strategy in the sector.
Right, okay. Well, a lot of question marks, especially on the globally linked sectors, and clearly metals, because of the concerns around trade wars and the kind of global growth slowdown that it's going to actually implicate. You are seeing metals really take it on the chin right now. But Kunal, can metals be shorted even after this huge sell-off that you're seeing today?
Yeah, if there is a recessionary kind of a phase, then of course metals have on a longer term basis would go into a downward trend. And I think we've seen that happening in 2008, 2020, maybe for the first couple of months of 2020 when the sell-off was a bit more extensive. But I think when we look at this in the historical scenarios, these stocks, they generally tend to underperform for a significant bout of time. So I think now the bigger question is that if the global markets are indicative of any kind of those recessionary fears, then we could be looking at much more drift down for many of these metal stocks. And so typically what happens is if there is a 5%, 7% kind of a correction, we generally look at this as a contra buying opportunities, or for traders who missed out on the previous rally. But with this kind of a sell-off and the setup the global markets are showing, I would probably be a bit more wary. So maybe a shorting opportunity, but definitely not a long opportunity.
All right, so that's the take coming in on metals. In fact, today we also spoke to Manish Dangi, who also spoke about gold, saying that gold is right now a sell on rise sort of a story at this point in time because the valuations are concerning. But on that note, we'll actually slip into a break on this edition of Closing Trades. When we come back, we'll continue charting markets for you. Don't go anywhere. Welcome back. You're watching Closing Trades right here on ET Now. And if you look at the markets, yes, no respite from that selling spree, given the fact that you have now Dow futures also that have slumped much more. There was a tad bit of recovery in the Dow futures, but from there on now we've only hitting the day's lowest point when you talk about Dow futures, as well as you have stocks Europe also that is down about 2% right now. Actually, it's set for the biggest weekly fall also since February 2022. It is now down in excess of about 2% or so. So yes, global markets also reeling under pressure. It's not just global equity markets, even crude market. That one also is down and out, given the fact that the crude is heading towards their lowest close since about midst of 2021. Let me bring on board Ashesha to exactly tell us what's exactly happening in the crude market.
Well, yes, after the brutal 6.5% fall that we saw on Brent crude yesterday, it is down another nearly 1% in trade today to trade below that $70 per barrel mark. And as you mentioned, Brent crude is now down nearly 7% on a year-to-date basis. But two main reasons why Brent crude has been falling over the last 1 to 2 trading sessions. One, of course, is tariff war, which continues to escalate, which has posed demand concerns, because of which demand for energy could fall, and that is the reason demand concerns continue to rise. Apart from that, OPEC Plus came out with an announcement yesterday where they said that they have rolled back their decision to increase the output, which means earlier the output increase was supposed to be about 135,000 barrels per day with effect from April, but now they've increased it further, and now they've said that output increase could come in at 411,000 barrels per day, which means supply could increase in the global market, and this is the reason oil prices continue to decline. In fact, Goldman Sachs came out with a report, and Goldman Sachs has now gone ahead and lowered their price target for the full year for WTI crude and for Brent crude. So for Brent crude, they've given a target of $69 per barrel for this calendar year 2025, and they've given a target price of $62 per barrel for calendar year 2026. Now remember, falling crude oil prices is a positive for Indian economy because we import a lot of crude oil from the global market, and as far as stock and sector specific action is concerned, it is also a positive for sectors which consume crude as their raw material. So for instance, tire companies, lubricant companies, all of these tend to benefit on account of falling crude oil prices. A whole host of sectors like the companies the likes of Vedanta also lose out on account of falling crude oil prices. But yes, crude oil prices have now fallen below that $70 per barrel mark.
I look at what happened as far as copper. You're well down, nearly down 4%. A lot of those other industrial metals were sold off heavily. I think one needs to be, and silver, you can't take your eye off that, down 8%. So, when you're thinking of that, gold was down a touch, and as it says on the screen, 1.7% down. I would be probably chasing gold more than anything in the short run, and that's got to be over the rest of the next couple of weeks as some form of safe haven. It's had a tremendous rally to the upside, as we know. I feel as though that a lot of holders of gold retail wouldn't have sold their positions. If you're in the paper market, that's a different situation completely. But that physical attraction, and we all understand Asia and of course India's appetite towards it, I don't think that's going to wane anytime soon, and that's probably forcing more and more people to buy physical And I think that, over the next couple of weeks, that's a good place to be. And I feel as though you're going to see further softness across many of those commodities, especially the oil sector.
Well, the selling definitely is not subsiding at all. I just want to take a look at what the global markets are up to as well. While China, of course, is shut on account of a trading holiday, Hong Kong lost about almost 350 points. Japan lost about nearly 1,000 points. And Europe is no different right now in trade because across the board there too, you're seeing slashes of more than 1.5% pretty much for all markets. Look at FTSE MIB, that's down 4% right now. It's a 1,500 point cut that you're seeing on that index alone. Stock 600, and these are the broader, pools over there. 2% is the cut that you're seeing for that index. 1.6% down for FTSE, DAX down 2%, CAC as well lower by 1.6%. Important to take cognizance of what perhaps the US futures are up to right now. And what is it that you're seeing on account of those, and whether or not it is seeing some more excruciating pain after what turned out to be a vicious sell-off that you saw overnight. And there you go, S&P futures down almost 1%, 0.5% down as of now for NASDAQ, and the Dow futures once again are staring at a near about 400-point decline. So clearly smacking that the selling is not done with that yesterday's price action. There's more pain to go, definitely. Aditya, what is your own sense on what domestic participants should be looking at in terms of a portfolio construct? Should the market fall further, would you look to buy anything?
Hi, good afternoon. I think markets will remain under some bit of a selling pressure because today some key important levels have broken on the downside. 23,100, 22,900. These were key important support levels which were holding on till this point of time. And today we see markets selling off. The only interesting point, Aisha, out here to note is the VIX is not seeing any major spike. There's no significant spike on the VIX. Which is a kind of a comforting factor as of now. So next week will be very important, though it's a truncated week again. It will be key to see if actually market bounces back. And again, as Bank Nifty was showing strength, now it's giving up its gain. So that is something a bit of worrisome. So 22,900, we need to see where we are closing around, in and around those areas. If that is broken, I think one should still stay away from heavily getting into the market. 22,700 then is the next support area. Few areas where I think one can actually look at initiating fresh longs are clearly the domestic consumption space. The FMCG is bucking the trend. I think so. This is one space which can actually see some kind of a recovery from current levels. And if somebody has a strong heart, maybe they can start nibbling into some of these mid-cap IT names which have significantly fallen off the cliff. I would recommend don't go all in one go at current levels. Maybe do a staggered buying because a 10% correction in the Nifty IT index this week itself is massive. And you will see a recovery, Aisha, from these levels, of course. So maybe something like a Persistent Systems or Coforge or an LTIM. All these stocks can be looked at. There will be a short covering rally soon in these company counters as well. But maybe look at staggered buying. Something can be bought today, and then next week, if you see a further decline, some more stocks can be picked up from this space. Metal for me is a clear avoid still. Because I see some more selling pressure. Banks and NBFCs do seem interesting to me. So apart from FMCG, and if you have a brave heart, maybe get into IT. Apart from that, maybe an FMCG and bank can also be looked at.
Okay. Narendra, what's your own sense? What would your portfolio bias be, or at least recommendation for?
Yeah, definitely we would be more focusing right now on domestic-oriented stocks, and we also prefer banks, financials, and banks, private banks like ICICI Bank in PSU, SBI is there, then Chola Finance is there in NBFCs, Bajaj Finance is there, and apart from this, we prefer durables more like Voltas, Blue Star, CG Electroplast, EPAC Durables, and after that. FMCG may also be looked at, and then in healthcare, we are more favoring hospitals rather than pharmaceuticals. So in hospitals, you can go for KIMS, then Fortis Healthcare, and apart from this, then defense stocks are also looking at looks like good opportunities coming in. Stocks like Data Patterns, Paras Defense, Unimac Aerospace. So these are the categories we are looking forward to enter into whenever the opportunity gives market gives the opportunity.
Right, so those are some of the opportunities that you can look at or tap into right now in this market. But let's talk about what exactly is happening with certain counters. Federal Bank, that one was actually bucking overall market weakness in today's trading session. You had CLSA that's initiated coverage on that one. So you had Federal Bank that was actually in the positive territory. Let's see where it is right now. Okay, still trying to hold on to the positive territory given the fact that banks globally are under pressure in trade today. You have the European banking index that is down about 7%. You had the Japanese banking index as well see a sharp knock on an intraday basis. And now you have Nifty Bank also that has reversed course. And Kunal, what's your take coming in on Nifty Bank?
Yeah, so I think it's bound to be that the index will also go into correction, but it's not a reversal of sorts, at least on the chart so far for the banking index. We are still trading above the 200 DMA. We are still trading above the crucial short-term support, which is around the 51,000 mark for the banking index. And I think the more important point is that many of the large cap private sector banking names are still showing signs of strength, whether it's the likes of HDFC Bank, Kotak Bank, ICICI Bank, or even the likes of Axis Bank, which has been showing good strength over the last few days. Selling a stop for IndusInd Bank. You've seen new emergence of mid-cap private sector banking names like Federal Bank looking strong. Then you've seen IDFC First Bank recovering from those levels of 50, 55. So which means that the health of the bank Nifty is not as bad as what we've been seeing earlier. And I think that generally indicates that you might see this index being one of the stronger index going forward as well.
All right, so that's the take coming in on the banking index. Narendra, let me get your views on the banking space, because this one is a consensus buy call when it comes to experts, given the fact that yes, when the corrections, when we were hit by correction, you had this entire space actually see valuations correct as well and made it reasonable for people to look at it. What's your take now? Do you think that banks is the go-to place, and especially when you talk about banks, is PSU banks?
See, definitely, PSU banks are right now at good valuation. Even if you see in these results, if they are able to maintain their growth as well as names, then I think there's a good scope of valuation scaling back to earlier levels, which we have seen correcting in past few months. Also, just 2-3 days ahead, the RBI policy meet is also coming, so expect some rate cuts there also. Because we have seen inflation coming down and with the crude also coming down. So the expectation of rate cut is also pretty much higher. And then again, good monsoon would also give a good growth impetus to rural. So I think credit growth is also expected to remain good, especially retail credit growth. Hence, the banking should not be worry as far as growth is concerned. So therefore, we are positive on both PSUs as well as private banks.
Great to have you on the show. Thanks as always for joining in and for your time today. Let's just take in some closing trading ideas as well on that note. Aditya, what's on your list?
I've got a buy recommendation on Colgate Palmolive, Aisha. I think, as I mentioned, FMCG, I think so, should outperform going ahead. So I've got a buy on Colgate Palmolive. A good consolidation is going on here for a target of 2,600 on the upside. Can be bought with a stop loss at 2,330 on the downside. Unfortunately, Voltas is looking weak on the charts, and it has been seeing selling pressure continuously, broken down from a downward, from an upward sloping trend line as well. So I got a sell recommendation on Voltas for a target of 1190 on the downside, the stop loss at 1350 on the upside.
Kunal, what about your strategies?
So I'll go with the Ban Marico. That's a chart which has been doing reasonably well, trading above the 200 DMA, and now I think closer to that 650, 670 plus mark in terms of a breakout.
All right, so those are the closing trades coming in from Kunal as well as Aditya. But on that note, we slip into a break on this edition of Closing Trades. But remember, the global markets are reeling under pressure. But how does India stack up amidst the tariff fiasco? We spoke to a whole host of guests. Hear them out.
Right now, India will outperform for sure. But it should not stand in the face and have massive outperformance. Then more people will feel nervous and maybe more selling will come. Just be little bit cautious, but let it be as it is. But don't get excited that we are beneficiaries of something. We are not beneficiaries. We are just like every other country.
India is emerged as a better sweet spot relative to China, relative to Vietnam or Bangladesh, where we face competition from the export from or any other country. On a relative basis, we are in a better shape. Dollar index has corrected. So again, emerging market theme can come back. So I think the way we took a conscious call in the beginning of March that trading bottom is round the corner. I still maintain we have seen a sharp 8% sort of move in Nifty is corrected. Maybe once this correction get over in a day or two, I think India has potential to recover further.
Margins in India, which are still sort of very, very elevated, will roll over. And that is the part that, equity markets are sort of not liking for the last 6 months. I think that would continue to sort of trouble you. But again, if you were to be a pure equity investors between US equity and Indian equity actually look a better place because the fear of, massive dollar, what do you call strengthening is gone now, or rupee weakening is gone. RBI can cut rates now. And India has seen a cyclical slowdown already for the last 6, 8, 10 months. So at some point in time, some cyclical recovery will begin to happen with policy assistance.
I think China seems like a big loser right now, but China is already building the capability to take on America. And it as might seem like heresy and might seem like too fast pronouncement, but we could see the rise of China in the next 20 years to take on America as a rival. I think clearly in terms of what they've done to their economy, in terms of technology, in terms of trade, they're now trying to match America, and America is not understanding. The fact that they've got DeepSeek out there suggests that they've made very rapid advances in chip technology, very rapid advances in artificial intelligence, which has been America's growing point. So I think Trump is overstating his strength.
I'm bullish on China only because compared to everything else, China's been depressed. China's been down a lot, as you know. I mean, the Indian stock market's making all-time highs. China's been depressed. But as I look around the world, if you look at most markets have been having a very good time for the last several weeks or months. And when everybody's having a good time, it usually leads to bad times. At least that's what I have experienced in my lifetime. So I'm worried about nearly all markets.
But with closing trades, right here on ET now, the selling pressure continues on our markets. 22,900 just getting defended right now, although we were sub that mark just a short while ago. All sectors in the red. The only islands of green are Bajaj Finance, HDFC Bank, ICICI Bank, Bharti still flat. But the pain, of course, is in the globally linked sectors, or at least sectors wherein if there were to be a global slowdown, how it's going to badly impact them. Case in point being metals. Tata Steel, Hindalco, all of them really getting thrashed out. Big boys like L&T down 5%, ONGC is down, Tata Motors, although it had a brokerage downgrade as well, that stock is well lower. And now Pharma, that's caving in after yesterday's outperformance, given that comments coming in from Donald Trump that Pharma also could have tariffs imposed on this particular sector too. But let's welcome on board Chakri Lokpriya and figure out what he's making of the market right now. Chakri, hi, afternoon. How do you adjust your portfolio to this new world order, the post-tariff regime?
Good afternoon. I guess we'll readjust the portfolio every single day, every time Trump comes up with something new. And so having said that, I think, clearly we'll have to have a domestic-facing portfolio in that sense that companies which don't have any exports to the US. And the second is, all the global-facing sectors, metals, etc. I think probably we'll still stay away from. And it's going to be a conservative portfolio because next 3-4 months, until India arrives at a bilateral agreement, it's going to be a volatile ride.
Right. Good afternoon, Chakri. This is Shell also joining in the conversation. I wanted to get your view actually on the auto space, given the fact that the likes of Bharat Forge, or for the matter of fact, Tata Motors under pressure. You have a lot of OEMs also under pressure on back of what is happening on the tariff front. And how should one actually read into all of these sectors? Because they are traditional sectors that you actually tend to invest in. And given the light of how the news flow has been, how should one actually strategize for the future or for the long term now?
Companies like Tata Motors is fairly simple, straightforward. They have a US exposure, and therefore it is kind of weak. But for the companies like Bajaj Auto, other OEMs, or TVS Motors, Hero Moto, they have hardly any exports to the US. and therefore they should not be impacted as much. So there you would have only collateral damage. That is, if the overall economy slows down because there is turmoil, there's a slowdown everywhere, then it would slow down. But there is no direct impact, and I think we would still, given that Bajaj Auto, Hero Motors, etc., have corrected a fair bit in the last 1 year, we can incrementally look at them as the market stabilizes.
Right, so that's the take coming in on the auto space and the likes of Tata Motors. Yes, under pressure in trade today. You have CLSA that's downgraded from high conviction outperform to an outperform rating. They've reduced the target price also coming in for Tata Motors. So that one is under pressure. You have Morgan Stanley that has also gone ahead and downgraded Bharat Forge. So that's one of the reasons why that stock also is under pressure in trade today. But let's talk about Avenue Supermart, because that one is reacting to its Q4 operational performance. And you have a lot of brokerages also that have come out with the view on Avenue Supermart. Let me actually get head across to Snehi to exactly understand how are the numbers.
Well, absolutely. D-Mart or Avenue Supermarts, as we know it, is a stock that's slumping in today's trading session on the back of its quarter 4 update. Prima facie, it's a good update because if you take a look at the standalone revenue from operations, that's pegged at 14,463.4 crores, which is an uptick of 16.7% on a year-on-year basis. The total number of stores at the end of quarter 4 FY25 stood at 415, indicating that there has been 28 net store additions in quarter 4 itself, which is the highest quarterly net store addition by the company. So if all of this is looking good, then why is the stock declining? Here are a few reasons. This is on the back of brokerage notes. Morgan Stanley has maintained their underweight call on Avenue Supermart with a target price of 3,260 rupees per share. They believe that the standalone quarter 4 revenue that was up 16.7% is in line, and the 5-year CAGR is also at 18.5%, which is higher than quarter 3's 18.2%. On the flip side, here's what's biting away at the stock is the 5-year CAGR is lower than the average of 20% for quarter 1 to quarter 4 of FY24. So FY24 historic levels were 20%. This 5-year CAGR is at 18.2%. So that's something that's inching away at the stock. And they've also said that this implies an SSSG for quarter 4 to be between 8 and 9%. Citi has also maintained sell rating on the stock, target price at 3,350. They've also said that average revenue per store grew only 3.1% on a year-on-year basis. It's usually in the range between 1 and 7% in the previous 4 quarters. So it's towards the lower end at 3.1%, and average revenue per square feet throughput also grew by only 2.8% year-on-year. So these are the technicals that are biting away at the stock. But overall, on the prima facie basis, quarter 4 updates on the revenue front and net store addition front seems to be good for D-Mart.
Chakri, how would you stack up, the traditional retailers like an Avenue versus the quick commerce space, the likes of a Zomato or Swiggy, or for that matter, even a Zepto, wherein the cash burn is really high?
Indeed, I think, all the quick commerce companies the discounting has probably slowed down, partly led by, there is a certain amount of potential regulation and making them hold back on the discounts that they offer. So that can in turn turn out to be a fairly good thing for the traditional retailers, the brick and mortar retailers. And but those companies have now have to deal with a consumer who's just coming off, hopefully, of a slowdown. And the reason I say that is, with more money in their hands, post-income tax cuts, they could probably benefit a little bit in terms of more spend per store. But companies like D-Mart, because they're also expanding so very fast, that will eat into their margins in addition to lower margins of the business in itself. So I'd still stay away from the D-Marts of the world.
The value retail space in particular, looking to you on the charts right now, the likes of Avenue Supermart, or even for the matter of fact, you have V-Mart as well.
Shirley, that's for me, right?
Yes, for you, Aditya.
So I would agree, D-Mart to some extent looks approaching a hurdle of 4,200. That happens to be a major resistance for the stock. Till the time it actually crosses and sustains above that, I won't go ahead and stick my neck out and buy D-Mart. On the flip side, I definitely do like V-Mart, and I think it's on the verge of a breakout from a downward sloping channel, though it's a little distant away from current levels. It's around 3350 is where the breakout point is. But my sense is it will break out in the coming trading sessions and should hit levels of 3,800 on the upside. As a disclosure, this is one stock which has been recommended to our clients and would be there in the portfolio V-Mart, and we are really constructive on the stock as well. Apart from that, if we talk about quick commerce, I think it's time to look at a company like Zomato, because correction was seen in the stock and now it's underwent a decent bit of a consolidation. So at current levels, I think so Zomato offers an excellent risk to reward. On the downside, 200 is a good strong support, just 10, 12 rupees away from current levels. And on the upside, you can easily see levels of 250 to about 270 in the near term if you hold it for at least a quarter or so. So I think Zomato is something which can be looked at from the quick commerce space, and V-Mart, I think so, is another stock which looks interesting to me.
Right, okay, that's the take coming in on some of those retail plays, including, of course, the platform companies. But on the sidelines of the Startup Mahakumbh, hear it out from Vijay Shekhar Sharma from Paytm as to what he's making as to what the tariff wars could actually mean for the startup universe.
Target audiences that you might have, sir. But one burning question regarding the tariff issue, which continues even today, because Donald Trump has said that they're going to be pharma tariffs. What do you think the tariffs that have been announced yesterday, and how are they going to impact the overall investment climate? Because investment that's coming into startups is essentially risk capital.
Yeah, I mean, first and foremost, the tariff is an indication of that more and more countries should become self-dependent. And the India AI mission, which is working on building a model for India, it must build. I mean, there is no secret about it. You don't want someday some line to be cut or some tariff to be loaded or something to be done. So I'm very proud of that our mission and the purpose of our company, startups, government and regulator is on the right direction, that we are building things which are making us self-reliant. As far as the investments are concerned, there is no doubt about it. Whenever there is a trouble like investment, trouble like the tariffs, you would have expected the riskiest investment, because we are so India has a very interesting overlap in emerging market intersection startups. So first of all, EMs go down, then the startups go down. EM startups, hashtag India startups, are the last ones. But there's a bright spot. India has started to see local investments, and India's, I mean, to the credit of Finance Ministry and SEBI, that they've been able to get so many public listing done for Indian startups. The access to the capital will not be so negatively cut, negatively impacted, but at the same time, the single impact that I can see of the tariff on the startup is the funding.
When you say that there's going to be a near-term impact on the startup ecosystem because of what's happening in the United States and of course Europe as well, there are going to be ripple effects. Do you think that that's going to have an impact on the IPO ecosystem overall, because it's been a pretty robust ecosystem, especially as far as the year?
You said it very well. If you see EM indexes and the new IPO indexes, obviously there are different kind of price points, etc. But it can, like I said, it'll just settle in few weeks, hopefully, and then it comes back.
So you remain an India bull through and through.
Inevitably, and I definitely want to tell you, I do believe, and I'm going to use this statement many a times, that one point of time there used to be American dream stories and the folklores. There is an India dream folklore that has started and is going on right now. Look, let me tell you, I go to see my batchmates in US. They all want to know how can they come back to India. This I want to tell you. Countries look dull, the technology vibrancy look dull. India is vibrant, market, and so much to build.
So when we talk about building and startups, I have to ask you this question, which has raised quite a bit of furor on social media as well, which is divided over the comments of, India versus China ecosystem. Where do you stand on that?
I love that you want us to become like China, and it is many years of whatever investment in China is done. And I do believe that we will overtake even that. I mean, tell me the spaces that we've been, line items, the line by line, we are overtaking any and every country. And the expectation that is of the startups, it's a legit expectation. And many startups are doing it. It may not have got talked so much. We rather believe that there will be many startups showcasing their deep tech, AI, and there are many who are doing semiconductors. So there is a lot expected and there is a lot happening.
All right, so that was Vijay Shekhar Sharma talking about Paytm and the new sound box, also talking about tariffs. But let's talk about IT sector, because that one has been under pressure today as well. Continued pressure coming in for the IT space. Earlier in the day, we spoke to CP Gurnani, who is the former MD and CEO of Tech Mahindra, to understand and get some perspective from him on the IT space. What should one look at and how should one gauge the sector? Listen in.
You cannot make a move which hurts the
American economy, and this pain will hurt the American economy. We have seen it in the previous tariffs that were imposed on China. Eventually, did not hurt China as much. It hurt American consumer. So my belief is this is a very temporary pain and things will improve. I genuinely believe that the corporates will actually be using Indian IT, a company like Ionos or AI, to actually come out of the pain that the supply chain and retaliatory tariffs will cause them.
Well, that's the word coming in IT. Chakri, best avoided right now because of all the concerns, not just around AI transition, which were already at play, but now with US discretionary spends as well, perhaps on the shrink.
IT, actually, the sector does not have any tariffs. It's just that the fear is because there will be an eventual slowdown in the US, in Europe, and that translates lower discretionary spend. So if that is true, then probably earnings will get cut by another, 3 to 5%. Against that, there is likely to be a further derating. So clearly, in light of what has happened in the last couple of days, I think one should remain now neutral to at best to underweight IT.
All right, neutral to underweight on IT. Let's take a look at what Torrent Pharma is doing in trade right now, because that one has actually recovered from the day's lowest point. You remember the entire pharma pack has been under pressure in trade today, and there you go. Actually, it's at the day's highest point. That is Torrent Pharma for you. Kunal, how is this one actually looking on the charts? Looks like it's bucking the overall market weakness. But on the charts, do you think it's looking brighter than the rest of the spot?
It's looking better than the rest of the pharma stocks so far. But the stock has been moving on very thin kind of volumes in the last 1 month or so, as compared to the other traditional large cap pharma names. So maybe that could actually be an indication that the trading activity has dropped down, and that has led to the lack of volatility for Torrent Pharma. On the short-term basis, the stock is nearing a breakout of sorts above the 3400 levels. Currently, it's placed at 3290. So, which means potentially there could be a chance that the volumes may make a comeback, and you might probably expect a more of a trending breakout once the stock crosses levels of 3400.
Right, so that's the view coming in on Torrent Pharma. Let's put the spotlight on SBI. You have an upgrade that is coming from UBS today for SBI, where they've upgraded to a neutral rating from an erstwhile sell rating. They've raised the target price to about 840 rupees per share from 760 rupees per share. On the other hand, you also have a downgrade that is coming for Ultratech, I beg your pardon, IndusInd Bank. That's the counter. There's an downgrade coming from UBS on IndusInd Bank. It's downgraded to the sell rating. They've cut the target price. They're seeing the visibility is pretty weak for this particular counter. Chakri, coming to you, if you have to bet on the banking space, given the fact that that is one of the space that everyone's talking about, would it be the private sector banking space, or would it be the PSU banking space that you will tilt towards?
I would rather do the PSU banking space for the reason that most of the corporate spend, which is the PSU for the government, capex spend will go towards the PSU banks, and their valuations are also very cheap. They're trading, whether it's SBI trading at about 1x book to Canara Bank, Union Bank trading much below book value. The risk reward is pretty much in their favor. So unless there is a broad-based economic slowdown, which will then hurt all sectors, banking is in general placed because it completely sidesteps the tariff issue war. It's more about the banks in themselves.
Okay, that's the take coming in on the banks right now. But Kunal, what's your own sense? I mean, I know it's the early days yet. Today, HDFC Bank, of course, is reacting to its quarterly updates, and Bajaj Finance within the financial pool. But do you think the report card has been handed out? It's HDFC Bank and Bajaj Finance. Are they the strongest of the lot within NBFCs and private banks?
I think you can add Kotak Bank, you can add ICICI Bank. These are two names which have been doing reasonably well. So, I think the list is getting bigger because earlier the two prime candidates which in terms of relative performance which did well was only Kotak Bank and then ICICI Bank. But now you have HDFC Bank, which is not just showing signs of relative strength, but even signs of relative outperformance. You add to the NBFC pocket, the likes of Shriram Finance. That stock has also done reasonably well. Chola Finance has also recovered from its previous lows in the month of January, February. And then you have the other NBFC pocket, the likes of Poonawalla, for example. That's a stock which has done reasonably well, Aditya Birla Capital, etc. So there are a lot many stocks which are actually showing signs of improvement in the entire NBFC pocket. And I think that's what is making the sector a lot more attractive. You're not restricted towards just 2 or 3 names, which was seen in the month of February and March, where there were only 2-3 stocks which are moving up higher. But now the space is opening up, and you have a lot many differentiated names, different market cap stocks within those sectors which are looking attractive. And I think that's generally an indication that the strength would continue. So, after such kind of a sudden bout of volatility, there's bound to be maybe a couple of days of impact into these stock prices. But if you ask of recovery, then these are the stocks which recover the first.
Right, that's the take coming on the NBFCs, especially also the banking space. But Kunal, any BTST ideas that you have?
So yeah, I'll go with a couple of sell calls, and the first one which I would suggest would be a sell on Naukri or Info Edge. That's a chart which is looking weak with a short-term target of 6,200. Of course, the stock is on the verge of a multi-month breakdown below this 6,400 levels where it's closing today. Stop loss could be kept at 64.40. And the second would be a sell on MCX. That stock has confirmed a swing breakdown on the short-term charts, failing to cross over above the 200-day moving average. So would look out for targets in the range of 4,900. Stop loss at 51.50.
Okay, those are some BTST ideas coming our way. Today, of course, it's Interglobe Aviation, it's Marico, Bajaj Finance and HDFC Bank all the way, which have managed to really single-handedly hold out. But other than that, the rest of the market has really bled. So look at it, Tata Steel, it's going home with an 8.5% loss. That's pretty much the case with a Hindalco as well, has seen a very, very sharp correction. Also, Hindustan Copper, a 9% shave off. Look at Nalco, that's also shaved off nearly about 9%. Vedanta has fallen 8.6%. And that's pretty much the state of the entire metals pack. And by the way, metals has been a rank underperformer by a huge margin, because next comes IT, and IT is actually better at an index level. If you just were to look Nifty Metal versus Nifty IT, metals have significantly underperformed today. But even within IT, Coforge down nearly 8%, Emphasis down 6%, KPIT, Tata Tech, Cyient, LTIM, Persistent, Wipro, HCL, Tata Elxsi, Infosys, TCS, all of them really have fallen like a pack of cards. L&T as well is going home as a rank underperformer. A good 5% is the cut that you've seen on L&T as well. Reliance, again, weakness there. Jio Finance down 3.5%. The Adani names fell. Bajaj Auto was down, BEL was down, Trent as well fell about almost 2%. Chakri in this, okay, we will thank Chakri on that note, as would we to Kunal, but I'm going to hand it over to Snehi for the closing trades.
Well, absolutely, not easy to sum up the kind of week we've seen in trade. And let's pull up the charts and take a look at what Nifty has done in today's trading session. Before we talk about the week, let's talk about intraday moves coming in. A 1.5% cut coming in on the spot for the Nifty, a 350-point cut coming in. And at one point we were even struggling to hold on to the 22,900 mark. That's even true for right now. We had slipped on to 22,800, 850 thereabouts. A slight bit of a recovery from the day's lowest point, but massive fall from the day's highest point. And it seems like the way we had absorbed the tariff shock yesterday, we've given up all of those hopes in today's trade, because Nifty has been languishing ever since the get-go in today's trading session. And it's largely also got to do with the pharma pack of stocks, because Trump today announced that they have not exempt pharma from tariffs. They're just looking at it in a different way, and tariffs on pharma could be to an extent that has never been seen before. Nifty Pharma, second most top sectoral loser, a 4% cut coming in on pharma. We'll come back to pharma, but let's once again talk about the indices right now. Sensex also in tandem with the Nifty doing slightly better, about 1.2% cut coming in on Sensex as well, almost a 1,000-point cut on an intraday basis. Let's pull up the broader markets, because that's where more of this loss has been seen. The Nifty mid-cap was lower by almost 3% in today's trading session. Nifty small cap even further lower, a 3.5% cut coming in for the small cap index. Today, what's managed to hold on to the green amid a market like this from the Nifty 50 pack? The likes of Tata Consumer, Bajaj Finance, HDFC Bank, very strong update coming in, good update coming in for quarter four for Bajaj Finance as well. Nestle, Apollo Hospitals, ICICI Bank, these are your handful gainers. On the Nifty side, on the flip side, Tata Steel, Hindalco, the Nifty Metal pack is the biggest loser today. So stocks from that pack, Tata Steel, Hindalco down by almost 9 and 8% respectively. ONGC, Tata Motors, Cipla, L&T, Adani Ports, Wipro, IndusInd Bank, all of these are the biggest Nifty losers today. And of course, Tata Motors in focus on the back of the downgrade coming in rating as well as a target price from CLSA. So Tata Motors was a stock that was languishing in today's trading session as well. Sectorally, if you take a look at how the sectors have done, Nifty, FMCG and financial services were the only ones who were trying to hold on to some gains. Nifty Metal, 6.5% cut coming in, top sectoral loser, followed by Pharma, a 4% cut. Energy also almost a 4% cut coming in. IT, Realty, Media, all three of them have seen north of 3% cuts coming in. On Nifty Auto and Nifty Bank, 2.5% cut coming in for both of them as well. Yeah, so that's the cut coming in for both of them as well, and that's what the sectoral outlook and the play was in today's trading session. Some stock-specific action, we've had lots of that today on the back of quarter four updates. You had Avenue Supermart that was tanking away in today's trading session. On the flip side, Adani Wilmar did decently okay for itself. Angel One was a stock that was very low in today's trade, a 7% cut coming in on Angel One just today on the back of weak client additions coming in. So Angel One was another stock where weakness was seen. Also, other than that, let's also talk about some other stocks that were in focus. HDFC Bank, like I mentioned, very good gains coming in. The likes of Loris, Aurobindo, Cipla, Granules, Dr. Reddy's, Sun Pharma, Zydus Life, Glenmark, all of them in the pharma pack, very deeply tanking away in today's trading session. So that is something that has not held up at all very well for the markets today. Bank of Baroda also in focus on the back of brokerage now coming in, an upgrade coming in from UBS, but that has also not held on to the stock very well. 1% cut coming in. So largely difficult to sum up the trading day and the week that we've had today. Even though it was a truncated week, we've seen lots of action coming in, but that's how we're shutting shop for the day. A 1.5% cut coming in for the Nifty. We'll give the rate some time to settle, but seems like we've closed about 22,900 for now. But let's see what the new trading week holds for us.